back to Market on Close. I'm Sam Vardas, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Shares of Descartes Systems are rallying after earnings, so I'm joined by George Tsilis, senior markets correspondent, to get us across this one. What are you seeing as far as the earning? We're seeing a nice rally up 15%. What did they say which the street is rewarding today, George?
Yeah, so it is an overlooked stock for sure. I didn't know this company before today's segment, but for those who still don't know, Descartes Systems is essentially a global logistics and technology company. They provide things like transportation management, e-commerce management, shipping fulfillment. But I think one of their important category businesses is what they have is called global trade intelligence software. So this enhances their brokerage and freight forwarding services to integrate all the compliance and regulations associated with international trade. So everything from tariff and duty compliance, if you will, customs compliance, regulatory compliance, and so forth. So I think that's quite interesting in the context of the environment we're in with tariffs and whatnot. But they did report, a pretty good quarter. If you look at the numbers overall, both in sales and earnings, they posted about 50 cents on an adjusted basis, besting the 47-cent estimate. And that was higher by close to 17% compared to last year, where they generated 43 cents as a business. And sales beat the estimates by about 3 million, roughly speaking, coming in at 187 million, higher by 11% year over year compared to 168 last year. But the internal metrics actually improved quite a bit. And that's alongside, again, higher EPS growth compared to sales growth. And I always bring these two metrics in ratios in line or up all the time because they demonstrate trend positive numbers when you see EPS growth higher than revenue, at least 1.5 to 2 times. That showed for the quarter, and I think that speaks to why the stock was higher today. But also internal, like I said, metrics were higher with operating cash improvement for the quarter year over year, 22%, and even sequentially 16%, as well as operating income that increased by 24%. So you're seeing a nice move to the upside in this name. But one of the things I did also notice is when I did some research on this company is competition. And what I didn't know before this, which I found quite interesting, is competitors are not necessarily small companies. They're actually the big names out there, including major enterprise resource management software companies like Oracle and SAP. And Oracle, this is what I think is kind of interesting, actually has a division that includes transportation management software, which is a mainstay competitor of Descartes Systems. But nonetheless, I do think that if you look at some of the analyst numbers in terms of price targets, many of the analysts actually reduced their targets. For instance, BMO reduced their price target to 95, as well as Barclays to 106. Both of these companies maintain either an equal weight or hold rating on this name. So I think what's happened here is that overall, despite the quarter, which may have been sort of an impulse quarter contingent upon some compliance needs for customers, and that was a value-added component of their business software, the earnings multiple for the industry group may be being reevaluated here, as well as the earnings multiple for this particular business, which right now, at around 32 times next year's earnings, it's trading at a discount to its historical average, around 48 times, but nonetheless, the growth in earnings and sales going forward is still lower than those 5-year averages. So what I think is happening here from an analyst standpoint is they're reevaluating the earnings multiple for the group, but the price action today does reflect the positive report for the fiscal quarter they just printed.
Yeah, and I suppose it needs it because it's still done around 16% or so year to date, I'm just seeing. But you highlighted a couple of analyst notes. Raymond James also upgrading this stock to outperform now from market perform with a $118 price target. We're currently trading at $94 and change. They're talking about a potential freight market recovery here. The stock is positioned well for that. But it was really interesting what you said as part of your opener there, George, that what I'm noticing about this company and some of the CEO commentary is that this company actually thrives in somewhat of an uncertain environment. I mean, they've highlighted that as customers are sort of struggling with forecasting because of a lack of visibility around tariffs and geopolitical tensions, that is driving that incremental demand for those services. So it's somewhat of a silver lining. Can you sort of speak to that?
Yes. So yeah, all these things are accurate that you mentioned. This is, you could really look at this company as not just essentially a logistics and management company, but also essentially a global trade intelligence company. So that's, I think, the value proposition the company's presenting investors. Price action today relative to the 1 year, it's important because the 1 year in context, the trend is still down. Now, from a trading standpoint, trend positive is when the stocks are above 50-day moving average. But if you look at the 200-day moving average on the stock, it's still sloping down. But the price targets that many of these analysts have, including those I mentioned that you brought up, Sam, may suggest that the stock does continue up to the 200-day moving average, which again, price action today is very positive. So, yeah, from a short-term momentum standpoint, it could certainly continue from here, but it may face some challenging levels at the 200-day moving average as it reaches that level. So that's where you have to consider, positive short-term catalysts, but also the weight that the market carries from a technical standpoint is still over bearing right now in this name. So it's kind of a give and take in this name. Like I said, I think the earnings multiple for the group may be coming down, but in the transportation space, if you look across the board, the logistics and brokerage companies, inclusive of companies like Descartes Systems this year, have been better performance compared to FedEx and UPS, which are really capital-intensive businesses. So Descartes is not a capital-intensive business because it's a technology company, but it certainly has been overlooked by investors with the price performance down over the last year, but nonetheless a good quarterly report.
All right. Thank you, George, for getting us across that one. Descartes up 15% almost in trade today.